children of planet Earth. Hello from the children of planet Earth. Hello from the children of planet
What's up, everybody? Good morning. Good to see you all.
Hello from the children of planet
How are y'all doing today? Everybody doing all right? Don't forget to smash the like button. Get ready to get started. 2 minutes till market opens. A little bit of selling pressure at the open. How about that? What do we got going on here? No trades today. DD band break on the outside, right out the door.
When something happens to your kitchen and you say,
This is ludicrous.
you get
Having trouble?
Right out the door. DD band breaks. So I'm assuming it's causing that. There's nothing really in the news. There's a little bit of selling pressure. Just to dump us out before the morning. You know how this goes. Break the D band. Really no trade day for the most part. Sit out, watch it, wait on it. Don't forget, you guys, smash that like button. Don't have any news or anything big happening today. New setup with the camera. I did. I don't like where my camera is positioned right now, so I have to move it. That'll be today. We'll figure out where it goes. I thought I had it set up, and then I ultimately didn't like it because the way the light makes my face look weird. I think right now it's like gonna be a really glorified sit-out day. I think there's nothing really I like to do breaking DD bands. And for the data to come through though. Hey, sorry about that. Good morning, everybody. Sorry, I had my microphone muted there for a second there. Jared, to answer your question, I just made an announcement in Discord about it. There were reports that CQG was having a thing. But we'll keep an eye on it. Res positive. And below DD. Yeah, Jared, we like everyone had the same problem that day. I did too. Res positive and below DD. Still trying to make a comeback while QQ is having weird, kind of like somewhat untradeable day today. You're gonna have the positive resilience is gonna push its way to hedge pressure today. It's the only red light. So it's like the only thing that's alarming. The question is, when I get here, do I want to short this to somewhere? But the problem is that, you know, your DD band is right here, right? So you don't really have a lot of good trades off of this one. These days like this suck because there's not really anything you can do. So from here, like there's DD band, right? So blue back to DD. It's going to be like random from here. I'll put a big question mark. Obviously, res greater than 0. It's going to go above there. Res less than 0 is going to go down to there. So this is your DD band right here, right here. So resilience wants to push up, liquidity map wants to push down. DD band break is irrational, making it random from here. So the market's gonna, it's very questionable what happens. It's gonna be really random and choppy. You're flipping a coin if you do anything, play small. For sure. There's no volatility in the VIX either, so the market doesn't really have, or no volatility hedging in the VIX. And just made 6 points and called it. Hey, not a terrible trade. Not a terrible little scalp. And very smart, understanding what she's doing. Traded long to first resistance, called it. Took a resistance long, resilience long. Good deal. I don't want to trade it, so. But why long? Because resilience is positive. Resilience is the flux through the box, right? It being positive was enough for her to trade it to next resistance and just get a scalp. She just took that little leg. That's her whole plan. I can read her mind. Does that make sense, Iratai? Why long? Resilience tells you. It's resilience fluxes through the box. Let me show you. There's a cheat sheet. If you go in our Discord, y'all have access to the cheat sheets, right? If you're trading below the box and resilience is positive, it will push itself towards the top of the box. Or when you're irrational, like we were, she just traded to next resistance and bailed. So resilience wants to push to there. Right? It's telling you that. So she got in long at the open and then cut out at the first resistance she saw. Where was the support level? Do you see this box right here? The open price is support level. That's the most basic support and resistance in trading, is the open and close. That was the support at the open. So in day trading, the close price from yesterday and the open price from today are some of the best high volume pivots that you have, right? So let me tell you, let me read Anne's mind. Okay, ready? Market open, green off the open, and saw positive resilience, decided to trade it to half gap, and then saw the first resistance in the way and bailed out on a scalp, which is DD band. Am I correct, Anne? Did I get 100 on my test? Because when you're irrational, you just take your first pivot, get a quick scalp in and out, and call it a day. That was really smart of her. Does that make sense, Iriti? The open and close are always pivots. You can always trade off of those too. The cheat sheet is in the Discord. Ah, okay. It's in a place called cheat sheets. You're gonna go here. So they're also about to be on the website, so we're going to put them on there. Start training here. Cheat sheets, and all your cheat sheets are here on how each of the indicators work. Make sure you just save them all. Resilience is about a flux to the box. So the open, anytime you're inside of the box, this is what this is telling you. Anytime you're inside the box, it wants to push to the top side when resilience is positive. It wants to go there. Now, if you have other resistances in the way, you can tend to close out at other resistances, which is why I have like hedge pressure, for instance, or DD band are also resistances. This is a no trade day because we broke outside of DD band. There's really not much we can trade off of easily today. So with res is positive, it is hinting that we might break through hedge and push up to there. So one that was trying to trade this knows that you're in a very sticky spot. And then of course the DD roll is probably gonna have you like that. So what we know is that the market is gonna be very irrational and random and hard to predict. I drew this range right here to let you guys know exactly what I see. This is the bull zone right there. This is, you know, lower lows. We went hard to tell, but we're trading inside of this range right here. Pretty easy for everybody to see that, right? So being irrational, want to trade small, I don't really care about it. You know, we've got bull zone being probably resistance back to bear. We've got a break hedge pressure, which is a rare case, but resilience may call that break. It's hard to say. There's no volatility hedging on its own. You know, it's just comfortably in a mean reversion. So we're not going to get like big selling pressure, or sorry, big drops off of selling pressure because the market's pretty liquid right now. In reality, if you just got a scalp, like maybe from here to here, you're okay. A scalp from maybe from there to there, you're okay. Like that's a good scalp. That's a good scalp. But other than that, I'm going to trade today for directionality. Uratai, that's correct. She's doing that. I do that too. I usually do that every single day. I do the same trade. I trade off the open using resilience. You get it right when the market opens. I'm just not today because we're irrational. Like irrational Red lights, I sit out on those days. 100%. Ann does what I do. She likes to catch that opening hook. So no trade day today. She saw that it was 30 points worth of run, which is pretty big, worth taking. Resilience is positive, decided to trade it to half gap. Saw resistances in the way. When irrational, you take your first resistance and... Hold on a second.
Yep, totally hear you
And what Mike and whatever Mike just said.
Hey, Matt.
What I do? Hold on, guys. I'm on a space this morning.
We make it.
All-time highs. You know, I think it would be possible. It would be one of those things where I feel like I've traded long enough to think the timing of this can be predictable. Let's think. It'll be like the last couple days of the year, right? Where everybody's just kind of thinking it won't happen, and then it surprises you on like a Friday, right? It just comes out of nowhere and then hits you like right for the new year. So maybe the week before New Year's, we'll see. I think it's very possible, yeah. And the only reason I think it's possible is that the market, like the VIX has just been in like that the VIX has been in like perpetual decay, right, for the last, you know, months, and the market is just, I don't know what the mechanism is right now, because the economic data it was good for the year, and it's starting to turn slightly bad-ish. Like we're having this disconnect between, you know, the jolts going up and the continuing jobless claims going up. It's like, why are there jobs and people that need jobs and they're not connecting, right? Why? So where are we at right now? And it's like, well, the economic data is kind of looking kind of iffy. But I think people are just kind of riding the Fed wave that they think Fed's going to be cutting rates early next year. So I think that's really where the confidence in the stock market's coming from. People just don't want to bet against the Fed. Yeah.
Yeah, I agree. I think that's exactly right. Like, you've been on that same opinion as the rate cuts are coming sooner than people think.
I want to space you guys.
GM, take Robin here.
Sometimes I keep muting and unmuting so I can eat my breakfast or talk on a space. Yeah, that 77 will always be a resistance. Oh, where's my yellow line? It's gone. Yeah. Yeah, you're correct.
Yeah,
it's right there. Yeah, and also you've got this illiquidity pivot in the way, right? So it's kind of like 7 point. Yeah, you're right. And you have a yellow line right there. So yeah, get your cheat sheets in the Discord under cheat sheets when you guys want to take a look at those.
It's been a straight line down, basically from 388 down.
Profit taking. People love Microsoft. It's profit taking. Fresh highs here on SPY.
Oh, for sure. But I mean, it has not down. I think
Etsy, our $78 swings are up 600%. Next thing we're gonna do, Etsy. All December 15th.
That's nice stuff.
Etsy.
Talk about it in.
True. Spy calls up 12%.
Yeah, so today's one of those days where there's not really much that I like to do. There's so many different competing signals. I would say that if I were to take a bet, this is the only tradable area in that box. I think from here, I wouldn't try to do anything else. It's really hard to predict from here. You got so many different resistances. You have resistance there. You have yellow line resistance there. You have hedge pressure resistance. You got support waiting to push up. Resilience is the only thing that's giving me like indication to push up. This is telling me there's resistance to push down. So when you look at all of this, it's like one of those, how are you going to look at this, right? So at the end of the day, there's just too much going on. Not really a clean signal across the board. Now, if one were too long off of a hedge pressure break, the bull zone is always a decent target for that. If I would trade, I'd trade it pretty small. There are no red lights anywhere, but a couple yellow lights. So I probably can trade half instead of small. But again, it's just, you know, we're confined to this range. I think anything outside of that range is going to be pretty random and hard to predict. Oh, I got 100 on the test when I guessed what Maria's doing. Very nice. It's just a quick, the opening scalp technique is pretty, pretty good. And look at this. This is strong bull market going into the new year. Y'all see this? I mean, this is monthly maps are back to showing bull market, right? Y'all see that? I mean, that's pretty clean compared to what it used to be. Don't forget, guys, subscribe to the stream, give us a like, and follow. You get one of those. Us every morning. Follow us every morning. I'm going to make one of my awesome Babe Ruth predictions. All-time highs and beyond could be possible. All right, let's go. Monthly maps are clean through the new year, maybe even through Q1. The greater bull market is back, all things being equal with no catalyst. Seems Wall Street is betting on rate cuts despite weakening economic data in Q4. All-time highs and beyond can be possible. Q1. You guys see this? The bull side gently sloping down, nice and clean. Bear side gently sloping down, nice and clean. The parabolic bull market is back. Right? So with no volatility to go with this, the Vixen perpetual decay, I mean, the forward curve is pretty flat on the VIX. I mean, it just looks like the market is, I mean, those of you that are trying to buy puts and short this, I think it's not going to influence your trading decision, but just letting you know, there is very solid bullishness for 3-4 months going out. Chop until jobs number on Friday. I think Garrett's right. I think at least now, somewhat choppy. Yeah. There's a little bit of yellow line rejection resistance on the S&P. So I think today, you know, we're getting good evidence that this is the cleanest it's been since the Fitch downgrade. We haven't seen it looking so clean. All right, friends, don't forget to hit that like button on the stream real quick. Give us some love. While you're chilling here, give the algorithm some love. Nice, clean, short, easy day. Yeah, not really much to say from here. Right, so it looks like today I'm just gonna comfortably wait this one out and just like figure it out for tomorrow. Nice scalp, and those of you that took the open trades here, it's gonna get a little funky from here, I think. I mean, you got hedge pressure, you got yellow line, you got resilience wanting to push up. So like again, competing signals, right? This wants to push up, that wants to push down. There's not really a lot of volatility to say that the market could sell off to lower lows, but it very well could. Mean reversion on VIX means the volatility itself is balanced. It can still trade higher, but like I said, I don't think this happens today. So those of you that are trying to take shorts or look for volatility, like the market's going to get like bigger V's, you know, like a big fall. I don't think we're going to see anything like that without volatility to go with it. So best case scenario, in my opinion, the market trickles up, hits that bull zone, and then somewhat makes its way inside of here. And if it continues to rally, it'll probably do that. So if I were to make a call, I think it's something like that today. I guess the yellow line's going to pivot very rapidly. You got burned. Wait, how would you get? Oh, pre-market. Oh, okay. I was like, if you got burned going long after the market opened, the market just moved straight up. So pre-market. Oh, yeah. Well, what are you trading pre-market? What do you do that? What are you doing that for? What are you trying to accomplish, my man? Sorry to hear about your pre-market trade. Obi-Wan is disappointed in you, young Padawan. Pre-market, that's a no-no. You know that. You're grounded. You're going to your room. Think about what you did. Come back and apologize to your little sister. You got a little adventurous. I know. You do that sometimes. Pre-market's always hard to gauge. I hate pre-market. Every time I touch it, it fucks me up. That's why I don't do it. Coin flow. It's good though. Every time, you know, as long as you realize what you're doing, that's all that matters. In reality, trading's mostly always a coin flip anyway. As long as you can risk management, you're not doing too terribly bad. Something is going on with my encoder here. Give me 1 second. Can y'all still see me? Okay, my encoder froze up. We're good. Okay. All right, so you're here, just kind of sitting here in this weird kind of, you know, pre-market scratch-off lottery. Being with him, wanted to play the Powerball. He was looking, look, he was looking for the big win. He's looking for that pre-market Ferrari money. You flip that coin. Sometimes you get it, sometimes you don't. One only never done it. Big news. But as long as you know what you're, the best part is that there's no real wrong answer in trading. As long as you know what you're doing, as long as you know, like, okay, you know what, this is the Powerball in the morning, then you're not doing the wrong thing. You know what you're getting into, then you know the odds, and if you like the odds, you take it. It's more like if you're just doing it hoping for like things that don't exist. Like it looked like it was trending down, let me short it, or looked like it was going to revert. It's not like you understand, oh, it's pre-market, I've got no data, I'm missing indicators, it's a coin flip, fuck it, I want to flip the coin today. Put it all in red. As long as you know what you're doing, where your exit is, where your entry is, where your stop is, then you're really not doing anything wrong ever. A monkey could throw a fucking dart, a dartboard, and pick out a trading strategy with something like that. You know, like you will literally, as long as you have support, resistance, and a stop, you're doing the majority of the work. You just don't have a lot of conviction in the mornings before pre-market because you don't have a lot of information to help you tilt the scale. Is it going up or down? And then you're just like, okay, well, I'm lacking that information, so it's coin flip. From here to there, I'll take it. If you did that, I mean, it's not a terrible trading strategy. It's very basic, right? But it works in all cases when it works. And when it doesn't, you controlled your loss to be whatever you want to be. But as long as you know it's the coin flip bet, I mean, roulette is a thing. And that's a coin flip bet, and it's a very popular game. And you don't go into roulette thinking, I got some odds that are going to beat the house, right? Then you're just a moron. You're like, it's roulette. I'm going to flip a coin. It's a quick bet, in and out. So if you know which bet that you're in, then you're not really doing anything wrong. If you want to take a coin flip, and you took the coin flip. What are my thoughts on gold reaching new all-time highs? Ooh. Is it inflation play? It's a bet against the dollar. I think, yeah. I think that comes down to the event that when you're in, you know, squeaky times, possible recession-ish environment. I say ish because I made a tweet 5 months ago that said recession was over. So recession-ish, we're kind of like that soft landing that Powell was talking about. Data got better, it's slightly bad, but we're kind of out of the hole for now. Market's rallying again. But I think the inflation creation, it's a Sesame Street. Am I rhyming this morning? Inflation mechanism creates problems in tangible necessities, like in the core, you talk about energy and food. It also creates a need and desire for people to park money in more inflation-proof things, tangible assets like gold and silver, metals, whatever. You tend to see those things go up when spending power of the dollar goes down. People tend to revert to those as just default trades because they expect other people to buy them. Not that there's like a strong correlation, as gold has no role spending power. You're not like buying things with gold. It just becomes a trade people take, right? And it's a good investment, I think, for environments like this. All tangible things are going up in value. Your house is going up in value, right? Just because of inflation. Anything you can hold on to and hold in your hands is going to also ride the inflation wave. And since it's a quote unquote currency standard in a way, people tend to just buy that in periods of inflation. And I think because that last speaking event with the Fed acknowledges that their 2% target is not going to be hit for a while, right? And we will say, well, how long until Fed gets back to their 2% target? And I'm going to tell you, it's like 3 or 4 years out. It's not going to happen anytime soon. That's a slow thing. Inflation that we're experiencing right now is here to stay. I know people are like, you know what, let me just rent a house or rent an apartment, the rental markets, whatever, and I'll buy a house when inflation gets better. You're like 3 to 5 years out, I think, before things normalize to like pre-COVID-ish state. It's gonna be really hard for the Fed to drive inflation down in this environment without being aggressive with their policy. When they become aggressive with their policy, they threaten the labor market. So they just have to literally wait this out. It's a great question. Somebody said, always negative expectancy because the fee of odds are 50-50. Yeah, so profit sub tells you exactly where the double zero is on the roulette table of the stock market. It's the commissions and fees. All your coin flips, well, there's somebody that always wins, and that's the house, right? Everyone gets their money off of that. My futures data seems frozen. I think my no, my futures data is moving on the screen. My encoder is frozen. Hold on one second. Like the video feed is frozen. That's so odd. Let me close it down and come back. Hold on, don't go anywhere. Don't go anywhere. There we go, we're back. What's up, y'all? That's better. Have I ever provided back tests showing the edge of rocket scooter since once market is open? I have provided many different things at many different times.
So you're saying, Matt,
hold on.
You're getting a bunch of viewers. And good job.
Yeah, nice trades, Sam. Yeah, I mean, it's like days like this, you know, it's going to be choppy. It's going to be all, you just take scalps. Like some people that from our stream, like long and got out 5 minutes later. Some people shorted and got out 5 minutes later. I mean, it's just like, doesn't really feel like there's gonna be a big directional move in either direction. It's just gonna be choppy and flat. And these are, like you said, I like to sit out, but if you just got that quick put, got in and out, I mean, that's really smart. And people that here in this group, they understand that you can tell it's gonna be a choppy, flat market. Just take what you can get and run, you know, how you trade these days.
You can't necessarily bank on a trend. You just time and hand it all day. You get a deep profit take.
Sorry, I'm back to okay, so in the past, I mean, we have done back tests like as long as like 4 years ago, 5 years ago, whenever we started. What year is this? Almost 2024. When we started building hedge pressure and the walls and everything, we had some back test numbers back then. I've done live trading challenges since then where I provided actual tests, which I think are actual numbers from my trading performance, which is I think more realistic than a back test. This back test really just shows on paper what it should look like. Real trading results show, is it actionable from the human perspective? Anything looks actionable on paper. Back tests can tend to skew your results to favor an ideal situation where you're not like sitting there with sweaty hands and actually live trading it. So, and the human factor. All right. Gob, the answer is yes. Forward testing. Yeah, I think to me that's more important. And as we improve the strategies, and one thing is that, you know, the thing that has come out of our testing and our continual improvement of what we, oops, sorry. Did I unmute myself? Hey guys, what's up? I'm just talking on my stream. Okay. We're talking about back testing environments, which is fun. Okay. So the thing that we think is like most important is that, you know, as we improve our strategy and as we work on different things, is that creating more rules on how to manage position has been the fruitful effect of that. As certain things prove to be working well, and then when there's periods when they don't work well, the idea is well, can we have a deeper understanding as to why is it not working in this environment? Is there something that's common in all these trades or environments? And so we've created the irrational series of rules over the years. The DD bands was a new invention not long ago. 2 p.m. rule, different things that we just kind of put together and piece together environments where things were stronger, less than weaker, comes from real trading. Like a back test is really hard to identify that mechanism because you'll just see on paper like, oh, okay, it works 70% of the time, 30% of the time it doesn't, or whatever you come up with. And then it's like you would not know what happened those days unless you're actually trading them. So as you're trading them, you have a memory of what happened those days, and it's really easy for you to kind of say, oh, you know what? That is a day that we opened here and we broke this DD band or something. You actually have that memory that lets you create stronger correlations. And when you shouldn't use your tools. And as the years went by, that's kind of where we spent most of our time, not evolving the strategy, evolving the limitations of the strategy, the rules, the position size rules, the green, yellow, and red lights, like trade big, trade small kind of rules. And that's why I say I like to do a back test just really quickly, just to make sure it's got feasibility. The back tests originally were pretty clean and clear. Like an ideal situation, we found out when all these lights are green, in an ideal situation, if you open in a bear zone, you close in a bear zone 96.6% of the time on SPY, almost every single day. You open in a bull zone, you will close in a bull zone 96.6%. That's the actual back test that we got for SPY only under these conditions. And there was 4 months of data that we looked at. We did two-month spot tests and said that's strong enough to live trade. It wasn't like that's the number it's always going to be in all environments. It's like, well, that's obscenely large. That's feasible enough for me to take this to market and then start trading myself and see what I got. And now I'm trading 70 to 80% win rate, which is not 96.6%, but it's still fantastic. Under these ideal conditions, I can nail 7 or 8 out of 10 trades. And that's kind of the pathway, I think, statistically, that one should take a trading strategy, whereas a back test may not reveal all the things you actually experience in the market. So I like the back test to make sure it's not going to fuck me up when I take it live, and then I go live and try to see how can I perform with this personally. And the live result is, to me, what's more important than a back test of a strategy. Because when you get like technical analysis too, you see this problem happen a lot. You know, you might see like on a back test, every time these two indicators cross over, I'm going to long. And every time they cross over, I'm going to short, right? The problem is if this is a 10 period moving average and they crossed over right here, looking at the chart at the end of the day, it looks like they crossed over here at this point in time. But as the day was progressing, when you got to that point in time, and realistically in time, they may not be crossed yet. Because in a 10 period moving average, it takes 10 extra periods to anchor the 10th data, the 10th point in the array. So I'm about to sneeze. Oh my God. Sorry about that. So it can still take up to the number of periods for these to actually move. So at this point in time, it may look like they're not even crossed over. And as the day progresses, this point is still kind of wiggling a little bit as minutes pass by. And then at this point in time is when they actually crossed over here at that point in time on the chart. So because of that effect of averages, a back test in technical analysis inherently is a failure, because you wouldn't have acted on that at that point in time. They wouldn't have been crossed over yet. Right? So the idea is that back tests really don't do much for these kind of analysis, like averages. Anything that smooths out your data creates a delayed effect, as I just described. So if you back test any strategy with those kind of indicators in them, anything that looks at the shape, the momentum, anything that uses MACDs or harmonics or like Elliott waves or any of that stuff on a back test will fail in performance to get the same results because of that effect. It's a very simple mathematical effect. You guys don't understand that, right? So in general, I like the back test to make sure it's tilted like way above 50. Like it's far enough over here that when I trade it, realistically, I can hopefully be somewhere in there. Slight edge is what I'm looking for. So I try to create conditions where the physical edge that you get in a back test or simulated environment is obscenely large, so that realistically I have wiggle room to play to create conditionals that keep me from trading it. So so my idea was that percentage was what we had there. The percentage of if you open below hedge pressure, it was 89% of the time you didn't break it. All things being equal, no red lights, excluding its own hedge pressure break light. 89% of the time, it would stay on the same side that it opened on by the end of the day. So our traders here are trained to understand that under most ideal conditions, which is kind of what we're seeing today, it's very probabilistically that we open here and we're likely to close with this as the high of the day. And that's why traders like Ann come in and scalp and get out quick, because Ann knows. Ann sees this and she goes, well, this is probably the high of the day. Didn't you say that today, Ann? Right? Because probability is you're going to stay in the bear zone and below hedge pressure. So you know you're limited upside. And that's where that statistic is helpful in making trading decisions. That's why I drew like this thing right here. And so we're probably limited in a range. We're probably not going to break. We're probably not going to do much. And that comes from that profit. So at the end of the day, you think about those probabilities help me understand the limits of my day. And sure, yeah, it could rally maybe, but then it's like this, it's like a small percent of a small percent, all things being equal. Yeah, like the liquidity map is still accurate. Resilience is trying to fight it, which is what's giving you that upward pressure. But you've got upward pressure from here fighting downward pressure from there. And you also have yellow line resistance. I mean, you have a lot of things pushing and pulling this thing right here. But when you build your framework of your window of opportunity, this is the first thing you do. You go, what's my high of the day potentially? And you go, well, open below hedge, likely close below hedge. Open in bear, likely close bear. So the day is it's gonna want to do this at the no matter what it does all day, it's gonna want to do that in a way. Positive resilience is the only thing that would give me any hope that that's gonna kind of turn the tides that way. But it's not, but it's weakening as the day is going by. So my belief in that's getting weaker and weaker, right? It's volatile-ish, but it's not volatile enough for me to think that we crash. There's no hedge pressure breaks or anything crazy in VIX, and these are all nice and clean. So like I said, you know, we're probably stuck inside of here with a coin flip. You also got resistance there. Hedge pressure resistance there, DD resistance there. You got resilience pushing up there. You know, so it's not going to do much, I think. It's very hard to find the line between mechanical trading and discretionary. It is. So if you think about where the fine line is, everything you do is discretionary. The mechanical side is how you bet. That's rigid. Red light, 10% or 0. Green light, 100% of your normal size. Yellow light, 50%. The rigidity is where's your stop? How big do you trade? And that's the mechanical side. And if you just flip a coin in all your trades, you still have somewhat guidelines of your confidence and how big you bet and where you stop out. Those are the mechanical sides. And you're right. I treat everything like, even though I have a mechanical system, when I look at finding trades, in reality, you can treat everything discretionary, but the mechanical side never fails to be what I do. That's a great, yeah, you're 100% right, Prophet Sub. 100% agree with you. I think those types of numbers are good. They definitely help provide conviction in taking a position. Doesn't mean it's going to work out every time. Just means historically the numbers in your favor. And that's really what you're looking for. That's why, like, we don't create advertising marketing material that says 96% of the time, we know where the zone is going to be in. You know, it's like, I think that as a mathematician, I believe that that is an unethical marketing approach, because you have to present the conditions that go with that, other than a talking point off of a number that looks good on the surface. My approach is to always say backtest numbers are just garbage. They don't really tell you exactly what's ever going to happen. But what you want is a backtest that's so skewed to one side that realistically there's just a slight edge. Like, I want it to be 99% on paper, and when I trade it, if it's 51%, I'm happy. In trading, you're just looking for a slight edge. So if a backtest is like an overwhelming edge, then you can almost feel confident that you've got a slight edge in practice. And that's why I present it that way. Like, I don't say, okay, guys, 96% of the time we're down here. It's a 96% chance. I say it's a higher probability that we're down here than up there, most likely. Because that overwhelming backtest number in practice, realistically, it's more likely to be here than there. Even if it was 49.9% and 50.1%, that 0.1%, any small edge in Wall Street is always big edge anyways. And that's why I like to present it in a sense like a mathematician would, which is realistic. I could always float that backtest in a YouTube ad and build our subscription overnight to infinite levels. But I would, as a mathematician, kick my own ass because I feel like that would be an unethical approach to present a backtest like that's trading results, right? You can't really do that. And you have to label the conditions. Why'd you only do 4 months of data? Well, we don't have a thing that does backtesting for us. I had to manually log it every single day, put all the conditions. And I did 2 spot tests because in engineering, if you got, I had a reactor, had 30,000 tubes and there's a problem in getting a hot spot. Well, you're not going to go test all the 30,000 tubes. You're going to do spot tests. You're going to grab a random tube distributed randomly throughout the thing. Maybe you'll test 100 of them to isolate which area the problem is in. And then you go to that area, spot test 100 more, and then you zoom in and you can get to the problem with maybe 300 or 400 tubes instead of 30,000. And so a backtest is designed, in my opinion, as a feasibility study, not as an actuality study. Is it feasible to even attempt to try to trade this? If a backtest comes in at 60% or 50%, that's not good enough to trade. Your backtest needs to be overwhelmingly good to have enough fat in it to account for human error and inefficiency, things you didn't see, random conditions in the market, etc. So, and as Prophet said, you need a statistically significant sample size, right? So I picked a flat, choppy, like the market went way up and way down for like 2 months, and then I picked a bull market. And they both had similar results in the high 90s percentile. And I said, okay, so volatile market, check. Non-volatile market, check. Very similar. That's good enough for me to trade it. So now I jump in and I do a year worth of trading. And that 6,700 small account challenge that topped out around 90-something thousand that I did for like a whole year on YouTube. You guys all remember that. Like in 2020 or 2021. 2020 to 2021, I was trading. I think my trading P&L, or sorry, my win rate was like 70, like mid 70s percentile. So in a year worth of trading, actual trading, I maintained a greater than 50% personally. And to me, that's the statistics I think of. And I go, I trade it that way with that percentile with the way I trade. Doesn't mean you guys will, doesn't mean other people will. But to me, that's the most important number. That when I had that slight edge, because the backtest was overwhelming edge, I believed I had slight edge, and that gave me strong conviction to make the trades I did. And I was very cautious making the trades I did. And I did win 7 to 8 out of 10 trades in actuality, which means unforeseen conditions, random events, day after day. It's not spot testing, it's real testing. It's enough for me to say this is good enough for me to risk money on. And creating enough irrational sit out rules to say that under the ideal conditions, what are your conditions? It's good enough for me to trade. I want to see 90% on a back test. Like I want to see it overwhelmingly good on a back test so that I'll commit money to it. So I'll be confident that I've got a slightly better than 50% edge. The last day on the stream, I cut out my stream at a high of the market. So I'm the high of the account. So my last streaming day, the account was at a high. So we went to the last stream, the account was at a high. So that's answering your question. And then we went to Zoom after that. But I think in that particular challenge, I went on a 75-day win streak too. That was all on YouTube. The first 75 days of the challenge, I didn't lose a single day. And that was, every trade was live. There are people here that were, if y'all remember that, let these folks here know that I was here. Tell me you were here for that. You watched every day of that 75 days. The titles of the streams were literally day 72, no red days. And it was all S&P futures the whole way up. Some numbers together, each time mechanical and up discussion, just guessing, struggling to break DD. BR means you're in a bear zone, S means you're under hedge pressure, and U means hedge pressure is over, MH means correct. Oh yeah, you were here, weren't you? Yeah, you were here for that. I don't know if you were here for that or not, for the whole thing. So like, to me, it's very important to be to be very scientific with your approach to what you're dealing with. We all know the stock market's random. It's like playing poker. You're trying to find any edge you can against the house. You're not trying to find something that's going to work 100% of the time for you. You're trying to find something that's going to work 50-something% or more for you. And then design your risk management around when you do it and when you don't, to kind of boost your odds a little bit on trading only when you have high conviction and not trading when you don't. And that's really the... Close you ever build range trading algos and trend algos. Then leave it up to the user to use which one. Yeah, that's really smart. You just need a statistically significant sample size. Well, here's the thing. In stock market, there's a better... I think that people should create the stock market like it's a discontinuous data set. Like an example is that it's a data set. Imagine the seasons, right, of Earth. Spring, summer, winter, fall. Biologically, the Earth changes in the seasons. You got the summer where plants are spitting out pollen, spring and summer. You got the winter when the leaves are gone. Dynamically are different environments. You have to treat the stock market like they're dynamically different environments and chop it up into pieces. Like, you know, there's going to be things there's going to be snow in the winter and rain in the spring. You're not going to be like, well, statistically, it only rains this % of the time of the year. If you really were to say, okay, in the spring, statistically, it rains 90% of the time in just the boundaries of the spring. You need to chop the stock market up into seasons or boundaries, not seasons, but stock market seasons. Like, you have to remove things from your data set because they just don't really apply. For instance, earnings, right? Take any strategy that you make and remove earnings because that's trying to look for snow in the summer, right? And you know it's random, remove it from your data. So if you need a backtest of years worth of data, you need to remove any day that's got major earnings, like major earnings week, right? From any technical strategy. You want to remove any event that has a news-driven event pre-market, like CPI, things like that. You want to remove any FOMC day, things like that, where the market can move on a dime, right? And so remove all those from your data sets. It's like removing summer from your data set of what's the percent that it will, snow in the winter. And so you want to remove things that just obviously don't apply. That's kind of where I'm going with that metaphor. Because you want to know under what conditions you should use your strategy, and then just don't use your strategy on the conditions that apply that you remove from your data set. And so you want to remove things that you know can be random statistically, jolt the market around statistically, and like treat the market like that. I don't like to use like, okay, what are the last 2-year back tests? Anybody that provides that is like a trading program or indicator, seller or whatever, and it's just looking at a string of historic data, you're including things that don't really make sense because you're including random effects into your data set. Like your back test is showing nobody's technical strategy is going to predict the outcome of an earnings report, right? So why even include it in your data? So what you have to do is draw boxes around which data you include and don't include, and therefore you draw boxes around which data you trade and don't trade as well. And that makes it a whole lot easier to isolate a trading strategy for somebody building algorithms, is to create conditions where you do and don't want to trade them, right? Like another example is I would remove all days where DD band was broken because I don't trade when DD band is broken. So therefore, what's my strategy's probability under the ideal conditions I will trade it? And then you create a really strong trading system that way. People that try to create trading systems for themselves will stop it. Okay, what's the back test say over the last 3 years? Oh, it's 60% win rate. That's a very weak way of testing, as any engineer would tell you. You might say, oh crap, it only snows 20% of the time. Shit, I'm not good at this. Well, no, well, it snows 90% of the time in the winter every day. So your snowing strategy correlations need to have a box around when you use them and when you don't, right? And that's kind of where you have to go. You think it went for an 82 days win streak? I think we went back and counted and it was officially 75 days, but yeah, it was something like that. You remember that you killed it? I had so much fun back then. I'm way too distracted these days to and the market's a little wonky these days to probably get lucky like that again. But we did go on like a 10-15 day streak, I think, at some point this summer. We were freaking out. Once we get to like day 10, day 20, everybody here was like, oh my God. And every day it just became more and more pressure. People were showing up, trolling me just to throw a wrench and watch me lose. He's gonna fail. He's gonna fuck it up. It was crazy. That's a lot of. I'm too old. My old heart can't deal with that anymore. But yeah, so my question to anybody that's creating a system or wants to tell me about trading system is, what are your conditionals? Like, when do you use this and when do you not use this? And if somebody doesn't provide you a list of when it doesn't apply, you'd be very skeptical of what you purchase from people. If somebody claims to have a system that works in all environments, I'm going to tell you the answer is that's completely bogus. And if you still want to bite the apple that they're dangling in front of you, you ask them for trading results. And if they still don't show you their trading results, which when I showed you guys mine on stream to validate, and I can say, yeah, under these conditions, very high probability, only under these certain conditions. And then I trade and go, see, no, I make this win rate, and you guys watch me trade every trade for a year. Okay, so now I created all the pieces needed to validate that I have something that works for myself. That's the only thing I can validate there. But if somebody out there is like, I got a system, it works really well, there you go. You know, open it up, plug it in, you're good to go. Just push buttons, you'll make money, ding, ding, ding. And then all of a sudden, you go, well, what's the probability? And they go, oh, you know, it's like you can trade anything, up, down, whatever. It's always on, always firing trades. You go, that's skeptical. You have no conditions when you have no confidence. Your confidence is equal to all markets, all news events. Well, that's the guy Matt told me to be skeptical of people that say that. Can I see your trading results? And they go, I don't know if I'm going to show you my trading results. It's private or whatever. And they don't show your trading results. And you still get out your wallet and buy it. You deserve to lose all your money because you're an idiot. No offense. Oh my God. You might as well just walk out there and put it all in red in a casino. Like, you got to be smarter than that, right? If people don't give you conditions to when their stuff doesn't work, and or give you results to show you how they use it and when they use it and when they don't, you're just blindly buying something that claims to work in all environments. And well, I mean, if you want to throw magic beans in the ground and hope a beanstalk grows, that's up to you. But to me, you got to have one of those two things in every scenario for any kind of trading or betting strategy. Somebody that's playing poker is not betting the same way on every hand. They're going to see two cards come out and they're going to go, nope, and immediately fold. Their conditions that they are looking for don't apply and they fold immediately. You need to have those kind of conditionals in any kind of betting strategy where part of your game that you're playing has random effects. The randomness requires you to draw a box around where you have conviction and don't have conviction. That is any betting strategy in any game you play. Yeah, whatever money I made that year, profit sub, we built a trading platform. That's what we did. That was that was before we had a trading platform. We sunk a lot of money into building Rocket Scooter. All money I made that year got recycled into this beautiful blue thing you see on my screen right now. Well, here's how you want to, if you want to day trade for a living, this is what you do. If you got $10,000 in an account and you make 20,000 in that account, like you make another 10, you're at 20, you put 10 in your pocket. You cash out anytime you double your account, take out what you doubled. That is the simplest cash out strategy. Don't run an account up and up and up and up and up. Take money out because that gives you a second chance to do it again. I have a buddy in real life who trades exactly the same way. He's a very rich guy, multimillionaire guy, only plays with 5 or 10K at a time. Anytime his 5K turns to 10, he'll put 5 in his pocket. Every time his 10 turns to 20, he puts 10 in his pocket. If you take 5 and double it to 10, you put 5 in your pocket, you get another chance to take 5 to 10. You don't see it as you made 5 grand. You see it as you get a second opportunity to go in case you blow up. And each time you double your account, cash out, just make a little bit of money and store it in a bankroll and do that on the side. Yeah. Any strat can work for a streak, but knowing when to run away with profits is the hard part. Because there's no system for running away with profits or cashing out. In reality, it's a catch-22. Well, actually, not it's more like that's what I'm looking for. You should only day trade money you don't need. So therefore, why would you cash out if you don't need it? And then there's the catch. You shouldn't need it, so why cash out? Therefore, there's no method that you can come up with to tell you when to cash out. An easy thing is if pretend that you needed that money, you cash out as bills are coming up and you're cashing out to pay your bills. But you shouldn't trade like that. You shouldn't trade with money you need to pay bills. Trading should be money that you can afford to lose all of and be okay. So therefore, you don't really have a guideline of when to cash out. The double your account cash out method is a great strategy. Try not to go on long streaks without removing something. But again, if you start at a place and double your account, always take some out and put it somewhere else. That's always a good strategy. A lot of people do something similar to that. You know? Like get to a certain level and take out a big chunk of it. Don't just take out little bits here and there. Your next door neighbor is a professional poker player. Even they only play hand scenarios with positive expected value. Right. And it's like you have to create a system that gives you conditions on when to fold. Like today. Today was a condition where to fold. Did I say I was going to long the market's going to rally? No. Did some of our traders long and close out before hedge pressure? Yes. Did some people short against hedge? Yes. Did I sit out? Yes. Did everybody probably do something smart today? Probably, right? Our style here is to train you to do smart things. Nobody here at all would have longed right there against the liquidity map. The only thing I said was resilience was the only thing giving some bit of hope that we would go there. But even so, you know, we said the high of the day was right there, right? And so when you back out and just look at it, an overarching scenario is that, you know, high of day there was a correct call. And I'd have a lot of confidence as to how it was going to get there, what it was going to do. I just knew that high of the day was probably 457. And so because we broke DD, it didn't seem actionable to me. I could have taken a gamble short off of this to coin flip it lower, but I chose to sit out. It was very obvious to see that this could have been a great place to short from with the yellow line being there. We talked about those resistances, etc., with one thing pushing against it. And because resilience was pushing against it, I didn't act. But if you put a gun in my head and tell me to long or short, I clearly would have shorted, right? So in my style, I don't trade on DD band breaks, period. And because we had DD pushing up, yellow line pushing down, hedge pressure pushing down, resilience pushing up, all inside of here, I just said, you know what, screw it. I'm gonna sit out. So that's my poker style, is that I got the flop didn't look good to me, and I'm just like, yeah, I'm just gonna wait on this one. Your next new. Most people are hoping to do this for income, though not fun. Well, I wouldn't say it's fun, and I wouldn't call it income. You don't invest in like land for income, right? Trading is a short form of investing. I think most people think because traders advertise themselves next to their luxury car, and therefore you as a normal working adult think of your labor hours converting to salary, converting to objects that you buy. And then you see somebody that spends their money and time trading and then has awesome things they buy. And traders incorrectly connect the dots that, oh, this person's trading and therefore that's income, and they buy shit with it. It's very rarely the case. Most people that are trading are just building their wealth further, an investment account that they don't really need or care or spend the money on. They've got money coming from multiple angles. Now, day trading for a living is something you can do. But when you say for a living, you're going to start needing the money to pay your bills, and then you're going to start making stupider trades because you need bills to get paid. Trading should always be side hustle. Even if you do it full time, it's your side hustle money. You're already rich from other means or wealthy from other means. Therefore, you're not gambling to live. Anybody you know that's a professional poker player or professional anything that's related to gambling, it's feast or famine. They may have great periods of their life where they're very wealthy and periods where they're very poor because they don't have a second or third source of stable income. You're not going to create stable income as a trader. Nobody will. It's feast or famine. You may have killer years. You may have shitty years. You're going to be up and down, but you don't want that to be deciding whether you eat or not. No. Trading is short form investing. And I always tell people that it should be, even if you're full-time doing it, it is your side hustle at all times, because your brain needs to be wrapped around a stable form of income for your own mental well-being. And that's the real answer to that. Most people are hoping to do this for income. They not do it for income, they need to do it for wealth generation, which is different. So wealth is growing your wealth, right? It's not money that you're liquidating to spend. If you have 5K and you make 10K, you take the 5K out and you don't go spend it. You put it into another account that you're not trading. You save it and you invest it. And so treat all trading like investment, like money that's not liquid that you're going to pull out to pay your bills with. And you're going to have a lot better time trading. That's the way I tell people to treat it. Because if you try to go trade for a living and you don't have any other money saved up or other income sources, you're going to sit there and have periods of feast and famine, and your life is going to suck. I knew this girl in Houston that dated a really awesome professional poker player. He just won some huge tournament somewhere and made like $1 million. But for the 2 years of their relationship, they were struggling to pay bills, right? It's like, that life's very hard, very hard. Yeah, and so as Livewire is saying, traders in Puerto Rico that have trading as their is PR Puerto Rico, how they have quite a bit of wealth. As long as you have something to fall back on, then that's okay. So trading for income would be like you have stable money coming in elsewhere. As long as you have money somewhere coming in, parked aside somewhere, your mental game will be much better when you're trading. You're not trading because you need that money to pay your car payment. You're not trading because you need that money for like your mortgage and stuff. So it's like, okay, you're like, I work as an accountant or I work as something and I want to quit my job and make $100,000 a year as a day trader and make it. You're fighting the most uphill battles. Most people that are trading are already wealthy in some capacity to survive as a trader, to survive the feast and famine. You've got assets and money to draw from. So this is the one caveat of being a professional trader is one of the best ways to make money as a trader. I'll give you guys some tips. You want to write this on a sticky note, put it by your computer. The best way to make money as a trader, there's a couple of little Matt-isms I like to say is, number one is you don't lose money as a trader. The best way to make money is to not lose money. So you limit where you bet. Only trade in high confidence. Don't go out there and lose your money because you can't trade when you have nothing in your account. Number two is the best way to make money as a trader, unfortunately, is to already have money. The richer you are, the easier this game is for you. The less, now again, doesn't mean tit for tat, you'll be a better trader. It means it's easier for you because you lose one big part of the equation that everyone else struggles with, is that you need to make a trade because you have a bill due tomorrow. So you got to trade today. And most people get in that boat of desperation that forces them to take a stupid hand, when as a wealthy person can avoid it at all times. So if you already have money, it's much easier to just choose to sit out because you're in no hurry to make money. You can be more patient at this game. And that's the level I am at life, where I don't need to trade to make money if I don't want to. So I can sit out and I don't feel FOMO. People always, there was guys in here call me Iceman back in the day. I remember, like, Matt, you seem so cool and collected. You don't chase things. How do you manage doing this? Well, the easiest part is I have a stable source of income. Clearly, Rocket Scooter is a source of income. Other investments and businesses and things I do are a stable source of income as well. I don't feel the need to take every trade that I see, desperately needing to make a trading situation happen. And that's the struggle most people will have when they jump into trading as their primary source of income. It should never be your primary, because you will ultimately be feast or famine and be forced to make trades in times of need. And that's the hardest psychological barrier to overcome as a trader. Just teaching you guys what I would think. You think most people providing service are selling to people who want to quit their job doing it sadly, or they advertise it that way, quit your job and make money now. And everybody, I think people stay with me and learn from me here because I'm the realest motherfucker out there. I'm telling you, it's not going to happen for you, any of you here. I'm very real about that. But is Rocket Scooter the best trading style and system on the planet? It could be. I don't know. Probably not. Who knows? Do I want to tell you that? No. Do I tell you you're going to quit your job and be a millionaire tomorrow? Absolutely not. Do I tell you most of you are going to fail at this? Probably so. And I'm very real with people about how they should approach it. And so people that convert themselves to full-time traders, like going through our program, eventually over time, they gruel it out like a real trader. And there's a lot of people that do convert and become that because they understand exactly the game they're playing. And we try to make sure it's very obvious what this game is, what it's like. And that realism is what gives people the best chance they have at making it. There's no dreams or hopes. We're very real with people here. And I think that that's what made the allure and how we grew so quick, because people are used to hearing the promise of quit your job tomorrow and do this overnight. And then people come here and go, oh, well, they're actually looking out for us. They're telling us don't do that. Like, you know. And I think in a business sense, you know, trying to be real and be ethical about how you present trading to the public is something that is so rare. I don't know many people that do it. Most people out there will bend their sales pitch around to throw a bunch of hope at people and say, yeah, man, look at me. Look at how cool I am. Your life could be like mine. Check it out. And then it always makes me sad to see there's people gullible out there. I tell you, trading's gambling. It's like poker. You can create an edge. You have to be really smart and really resilient and very practiced to do this, to make any kind of income out of it. And if you're trying to quit your job to do this, I just say, you know, take my advice. That's not what you should do, but if you want to do it, okay. Started trading. And the real reason, yeah, and probably it's like I could create an ad that blasts out a 96% back test in very small fine print that you can't even see. I could be like, it only applies under these conditions, but what? So like cover my ass. But you see this giant 96% like on the screen, and all of a sudden the subs roll in, right? And Ashton and myself and everybody here are very honest people in real life, would never even sleep comfortably knowing that we would provide that kind of, I call it trader porn trickery. Like, you don't see me like spread eagle on the hood of my fucking $100,000 car, like, you know, twerking with money falling from the sky, and y'all like, this could be yours tomorrow if you buy my sub. You know, it's like, that kind of stuff is stupid. I can't believe people still fall for it, but they do. And I don't know if I just gave you guys an image of me twerking on the hood of a car, but sorry for turning you on this early in the morning. Started trading when you had a job, built up some savings, bought one account, eventually started a business, made real money, and your trading got a lot better, specifically because you didn't need the money. Livewire is a perfect example of exactly that psychological thing that I mentioned. When you lose that hurdle, now you can train yourself to have that patience without having a second source of income. If you can have that patience, which is very hard to do, then you've won the game. But even if you have like a second source of income or third source of income, whatever, you have just immediately bought yourself that patience. Like, I don't need to make a trade today. I don't need to make money today. I'm totally fine if I don't. And that is one of the easiest ways to start trading. So I tell people, if you inherited 100 grand and you want to become a trader, you put $95,000 in an account that you can't trade with, and you work a $5,000 account and try to double it. And if you double it, you take out 5. You can do it in futures. Don't trade with anything other than a fraction of the money that you have in life. Imagine feeling like that. Imagine you got $5,000 of bills every month. So at 100K, that's 20 months worth of bills, right? That's 1 and 2/3 of a year, almost 2 years. So from there, you're not struggling to pay your bills this next month. You blow up a 5K, start over. Blow up a 5K, start over. You're inching along. You double it, hey, put it back in the pot. And then over time, you realize that a year later, you still got most of your money. You might have won as many as you've lost. You've got a great year of education. You've learned the game. You've learned patience. And now you're ready to really do this, right? And I always just tell people is like, with futures are the best way to trade with like pennies in your pocket. You can start trading in so many levels, but you can trade with no money in futures. $30 a month to go do a prop firm or one of those trader funding programs to even build a trading account from that. And that's like, I mean, you can trade nano futures, which is like trading with pennies, like dollars, you know, not even big things. You can always trade with money you don't need by trading with a smaller denomination. There are penny slots in day trading. Nano futures, it's 1/10 of a micro. It's 1/100th of an S&P, I think, of a mini. So you can literally have a normal day job and go out there on the FairX exchange and day trade with like $2 or $3, you know? So that's simulating the same experience, you know? How much I cash out from those prop firms. I was trying to do a challenge like that, and then we released futures and I didn't. And I think that would be fun to try to do again. We're officially going to partner up with ETF, you know, when our marketplace launches and everything. I might do another one of those as like an ETF challenge and actually cash out. I just close the account down instead of trading it to keep. That'd be fun to do that. I did it just to pass the evals. Yeah. It'd be fun to try something like that. It would be fun. I'm just waiting for me to get a lot of downtime where once this marketplace stuff is launched and going, we're going to be in a good spot to where I would have a repetitive morning. You know, it's like we're still working out kinks and rock scooter based platform. We're still doing, I mean, I'm still pulled 90 different ways. So I long for the days where I can just get up, talk to you knuckleheads and trade for an hour or two and not have 40 DMs and messages. So it's much harder to go on these, you know, 75-day trading streak binges where I'm pulled so many different ways administratively with the company. That's the hard part, is that I don't get the consistent timing like I used to. I do miss that. But there will be a time when we come back and things are just kind of moving along and I can just wake up and trade and I don't have to do as much in the mornings. TradeAbate, what I used to trade futures, I'm using Edge Clear now through our platform, but TradeAbate's also great. They're a great broker, great company, commissions are great. That's what I used before I used my own platform, was TradeAbate. So I would still highly recommend them. They're great. As far as discount futures brokers go, I mean, clearly I'm biased to our own, but other than our own, you know, TradeAbate stands alone as being the best out there. As far as like stability, good working platform, the mobile app is phenomenal. Pulse is really good. Commissions are great. Customer service is great. No, I've never had any complaints about TradeAbate relative to like other brokers I've been with. So yeah, they're a great broker to trade with. Well, Ninja Trader now, but you know what I mean. Profit Sub says very hard for people to be ethical in space for that reason. In any space of wealth creation, people tend to, in any kind of thing, drop shipping, real estate investing, here, buy commercial real estate with no money down. Check out my program. You know, get in now. You know, hurry now for only 10 seats available, kind of thing. A lot of people make, and again, there's nothing wrong about trying to make money as an educator. Like, you know, when the basketball player's knees go out because he's too old to dribble and run and dunk a ball, he coaches, and coaching is not a, you know, coaching is an honorable profession. But he's not like, you know what, only 50 seats left. Come to my dunking course and I promise you'll be pro in 3 months for your money back. They don't do that shit. They're like, look, you ain't tall enough to dunk. Saying it's not in your cards. Not going to do this. They're really coaching off fundamentals and things you should learn from the wisdom that they have, which is great. But in the coaching space, in all aspects of wealth coaching, life coaching, you have inexperienced people taking on the role as coach, because it's very easy these days with all these pop-up dropship website type things to start a business as a coach. And people are coaching without the experience to give wisdom. And that's the hardest part, is that people are so desperate to learn something, they don't vet who their coaches are and say, well, how many years have you been doing this? Do you have any, you show me your results, or show me your whatever, or show you anything. And people just don't show you that wisdom. And it doesn't matter if it's like good experience or good results or bad results. Somebody that has a decade of bad results is still a great coach, because you can learn going in like, okay, well, this is what they do and it doesn't work. So I'm learning that. And that's where my dollars are being spent to learn what doesn't work, which is equally good as learning something that does work. As a scientist, I tell you that anytime we learn something that we can prove isn't a correlation or doesn't work in science, we're always just as happy as when we prove something that does work. If you can eliminate something as a possibility, you've sometimes created other correlations, or, you know, closed a door that was ambiguous. And so that's always good too, to learn what doesn't work. But like, there's a lot of coaches out there that are trying to sell you a dream in all aspects of like the wealth and self-coaching and hope, you know, kind of stuff. And it's like, do you have experience? Okay, yeah. Let me take your. Oh, you made $100,000 this month on this TikTok. Oh, what'd you do? Oh, you do something. Okay. Well, looks like you made money. Let me just check out what it is you sell. And then it's like, oh, you're selling some kind of course on something. Is it like real estate? It's hard to tell what it is. You know, let me just buy it and check it out. This dude made money. He looks like he's 22. He's got a nice car. All right, I'll check it out. Like, that's where it's come to. The TikTok world has created like an overnight coach, and COVID made it even worse. And people didn't have jobs. They just went out there and became coaches and stuff. And it's really hard. It's like the self-help world just immediately got 10 million gurus overnight. Everyone's an expert these days. That's the hardest part. Is Ninja Trader 100% legit? You create an account and didn't do anything with it. 3 days later, got email and called asking when you're going to add funds. Ninja Trader is legit, number one, but that sounds sketch. Maybe there's some kind of technical error, I would say. You created an account and didn't do anything. Oh, so you didn't put anything later. 3 days later, they emailed you calling, asking when you're going to add funds. Okay. Yeah, that's pretty common practice in futures. In futures accounts, you have to have typically an FCM, because like in futures, there's a couple layers to it, right? And equities, just think like you put your money in Thinkorswim. Thinkorswim's your broker, direct market access to the market, or maybe they sell your orders, somebody that does, and then all of a sudden you're trading. Futures is a few extra steps in the middle. You have introducing broker, then a futures commission merchant, then you have a clearing firm, and you got the exchange. You got all these layers that hold your money or hold your trades or route your trades. So like Ninja is like they're all the pieces in one now. Like Rocket Scooter, for instance, we trade using Edge Clear as an introducing broker. They don't hold your money. They don't do anything. They can execute trades on your behalf and close down trades and, you know, help you with your account, things like a broker would. A broker is like a service part. But futures chops it up into pieces. It's like the FCM is where your money is deposited into. And that's where your money sits, right? So the FCMs usually have an account minimum in the futures industry. And that's probably why you got a phone call, Keith. They usually ask for you to put in, you know, $500 or something to keep the account open or something, right? Wait, doesn't you look him up on Facebook? Wait, let me start over. Let me reread it. Is Ninja Trader 100% legit? Okay. If you're meaning NinjaTrader, the company, yes. Unless you're talking about some other NinjaTrader, like a guy named NinjaTrader, what are you talking about? You looked him up on Facebook, so the guy I call, and his profile said he worked for NinjaTrader for a while. He had so much of his family put on his Facebook that figured he'd be an idiot. Bro, I don't know what you're getting yourself into. It sounds weird. Okay, number one, people calling you, asking you when you're gonna. Okay, so ninjatrader.com, like NinjaTrader, the company. And I don't know what you're looking at people on Facebook. That sounds real roundabout. Why don't you just call the company and ask them what's going on? I don't know why you're looking up someone on Facebook asking you to deposit money. It's common practice for your FCM to ask you to deposit cash, because usually you do, to get your futures data coming through. So, I mean, but why are you looking someone up on Facebook? That's what I'm saying, to vet if they're real or not. That sounds a little strange. Like, from your perspective, like, why are you even on Facebook looking someone up? Did they call you from the NinjaTrader company? I mean, I'm sure what's going on is legit, but like, you shouldn't be having to go to Facebook to figure out if it's real or not. Oh, you just looked up his phone number? But why don't you just call them? Don't let people cold call you asking you for money, right? Just call them and say, hey, I got a phone call. Is this correct? Do I need to deposit money or whatever? I don't know. Like I said, I'm not really sure. Yeah. So like I said, it's probably legit. It's strange that, like, normally they would, like, if I open an EdgeClear account and they said, you know, deposit money to get your futures feed, and then they turn it on, they will probably call me and say, hey, can you deposit money into your FCM? You need to put your $500 in or whatever. And that makes sense, right? A lot of times, if you have an active account with, I don't know if Ninja still does this. I think they did this a long time ago. If you have an active futures account, you would get like a cheaper rate on the platform or something, or cheaper commissions. So if it's a condition for something you signed up for, then it would make sense for them to call you as well. I just don't pay attention how Ninja works. I'm not really sure how they work, but just always call them and ask them. Like, that's the right course of action. Yeah. I would make sure that, I mean, as Barb said, it's your account. So just make sure you don't send money into an account that's not owned by you, as Barb said. Yeah. I'm 80% certain it seems legit, but before you do anything, you call them and ask them why they're calling you, and make sure that, you know, you actually call your broker and ask them these questions. But yeah, but NinjaTrader as a company is legit. Yeah, 100%. But just never know if the phone call you got was not legit or not, right? As David is telling you is correct, just like you do with EdgeClear. Typically with the FCMs, you have to deposit money to get the real-time data. So a lot of times they will just give you a courtesy call to let you know that, did you deposit money or not? Mostly because they direct draw, or they draw the money from you to pay for the data feeds. Like, for instance, they take $11 a month from my trading account to pay for my level 1 data and the API fee, even if I'm not trading. So if that account's at zero, they will clearly call you to let you know to deposit some money so it doesn't go negative, because you may have elected to pay for data feeds and have it draw from the account, which most people do. Like in Trade of 8 back in the day, you can either put a credit card in your account or just have it direct pay from your trading account to cover your data. And so typically we'll get a courtesy call asking you to deposit enough money to at least cover that. And typically most FCMs and futures will have like a $500 minimum. That's kind of commonplace. You'll see that. But yeah. But for real. But the correct course of action clearly is always call your broker. Okay. It's like breaking DD band, market selling off. Nothing crazy going on here today. Can I sit down on this one? Yeah. And as Austin Walker has confirmed, it's probably just a courtesy call. But like I said, anytime someone gives me a courtesy call related to my money, I always hang up, right? And I'll call them back. So I'm in control every time, right? I will go straight to the source just to make sure, because you never know if it's a phishing attempt or something. Okay, with that being said, would it be best to just go with Edge Clear for your data because it integrates with your platform? It depends on what you're trying to do. Like Edge Clear, specifically, its purpose here is to have trading inside of our platform so that I can have a one-stop shop for my futures. Sorry, I'm coughing. The added convenience of having automated DD bands is great. DD band alerts and other alerts that we're going to create around futures is also the reason to have Edge Clear. If you don't care to have any of that automated, then any futures broker is good relative to what you need it for. Like RocketSQ doesn't have a mobile app right now, but Tradebait does. So if you trade mobile and you trade from your phone while you're like taking a shit at work or something, then Tradebait may be a better solution than Edge Clear. So in our side, you know, we don't get any kickbacks from Edge Clear for promoting them or anything. That's just our conduit for data. Well, CQG and Edge Clear is one of the IBs we work with. We actually work with a couple IBs, but Edge Clear is the one that just, you know, we prefer. We have a good relationship with them. And so it's up to you. If you want it for Edge Clear, if you want the automated data from your desktop platform, yeah, go for Edge Clear. There's the Philip and Dorman option, Iron Beam option. They've got a couple options that are good. They're all $500 minimum, and the API fees are CQG, so it's consistent. $11 a month for top of book CME data. Great. And then you get your automated, anything that needs futures will be automated for you as we make, and we do red lines and yellow lines down the road and catalysts down the road. You'll clearly have that set up. And I say I draw the line is if you need a mobile app, you're mobile trading, you know, go with Tradebait because they have a great mobile app if that's what you need. Our app is good on mobile, but it's not optimized for mobile. The platform shows up on mobile and looks great, but it's not optimized for mobile. So it's not nearly as good as the Tradebait Pulse, which is really great because we'll eventually build a mobile app, I'm sure. But that's kind of where I would draw the line. Yeah. So if you want automated DD bands, then just do the Edge Clear thing, or do both. You know, it depends on. Some people just use the Edge Clear to get the data to have the platform here, and then they still trade with like Tradebait or something off to the side for whatever reason. But I like having it all in one place. Makes it easy. We don't have all the features in the account manager, like reporting and showing performance history and things like that, because, you know, we got to build a lot of that stuff out and we haven't yet. So we're very bare bones when it comes to trading as well. If you need a lot of extended features, like I want to see what my expectancy is and my run up and drawdown ratio, we clearly don't have that built out yet. And we're not going to build that for a while. So that's another good reason to choose like the Tradebait side, because they have great reporting. It's really not, they actually did a really good job. I love how they did it. With us, you get your broker statements. You can get that, or you can log into the CQG desktop and see your historic reports from there, like your trading performance. You can do it in there. So we kind of have a way to do it in a way. If you go to CQG and log in with your CQG credentials, you can still generate some kind of report from their platform, I believe. Glad we can help you out, Keith. Am I longing? Ooh, should I? Reza is going positive. I do like that. I don't know, man. I want to, but shit. I'm just nervous. I need it to be greater than 10, and it's greater than 10, and it feels good. It's just too far out. It's too far outside of DD bands. I don't know if I want to touch it. If you look on Thinkorswim right here, where I do the, like, look. I mean, remember the illiquidity pivots rule. I mean, there's downside potential to there. We always look at the last yellow line, right? It's not like there's anything underneath me to give me faith. And while resilience is positive, it's like jumping around right here. And it's not jumping around right here. So it's telling me that there's some sector rotation. Oh crap! Fucking, ugh, that happens. There's some sector rotating going on. That's not tech. Why is the Nasdaq not moving? The S&P is. Something weird is going on. And there's no clear support for another 40 points. So while I might want to feel like I'd went along, this is just too scary to touch. Right? Yeah, Omar. Where would I long to? Well, our high of day is even below here somewhere. I could long to there maybe, but like it's more loss than gain in my eyes. It's too risky to do anything here. So it's a great question. What would somebody long? Because resilience is positive, one could. Should one? And I don't like to trade outside of DD bands, period. Even though there could be a big swing up, I don't have a support to trade from. I don't have any guideline of like where should I long from. That's a great question. Yeah, bouncing off a channel support. I mean, you know, if you're falling on old TA like that, I would say that this 45.50 level was kind of like a peg for the last like 3 weeks, 2-3 weeks. But yeah, I'll just be very careful from here. Yep. All right, guys, call it a day. No trades, no loss, no anything. I'm gonna go out here. We'll see you guys at 4 o'clock for Zoom, like we always do. Love y'all. Thanks for tuning in. I'm gonna get back to do some work today. Lots and lots of big things going on in our pipeline, so I'm excited. If you guys haven't checked out, when we built over Rock Scooter, head on over and make sure you subscribe to the stream. We're here every morning doing trading wisdom, trading information, using the Rock Scooter platform. We love sharing what we have. We love having you guys around, supporting up what we're building, and big marketplace coming out very soon. You're going to see a lot of changes on the website, what's available, what we have. It's going to be massive. I mean massive. So we're excited to do this. We'll see you guys later. Love y'all. Head over to the Discord. The link is in the description of the video. And send us a message and we can show you around. Love y'all. We'll see y'all later.